Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, October 2nd, 2015. In this video, I wanted to cover the biotech sector, specifically the current trades, my own personal trade, and the official trade idea on the site. I'm using LABU and have been recently as a proxy for trading the biotechs. LABU is the 3-time leveraged long biotech ETF. So what we'll focus on mainly on this in this video are the charts of XBI. Whenever trading these leveraged biotech ETFs, I prefer to use the one-time leveraged version, or I'm sorry, the non-leveraged version that tracks the actual index. And the LABU tracks the Spider S&P Biotech Index, so that's why we're using the XBI here. And the reason being, just to digress for a second, is when you look at the leveraged ETFs, I've often talked about the decay, which especially over time, that decay due to the leverage gives you really a false history of, when looking at the charts. So when you use the one-time ETFs, it's as good as tracking the index or just as close. And when looking at chart history, especially if you go back more than a few days, you're going back weeks and months, you're going to have a distorted picture using those leveraged ETFs, especially in a volatile sector, and especially when using 3 times leverage instead of 2 times leverage. So with that being said, here's the XBI. And one other point on this real quick to clarify on the site, because it may be confusing. Most of you know I've been bearish for months now, extremely bearish on the biotech sector, and was short that from, not far off the top. That was an official short idea on the site for a while. And then I posted on Tuesday of this week, personally closing out Monday before the close, and then Tuesday morning, all of my short positions on LABU, and then I reversed to a long, and that was right here. Tuesday was the 29th, so on the 29th, when the day that it bottomed, closed a little bit before, that's when I reversed from short to long, and the reasons were stated there. Now, I also stated leaving on the LABU swing short trade as an active trade, even though it, at that point, that was my first profit target. As I stated, I believe over time there's more downside. I believe that the biotech stocks have they've clearly exceeded the definition of a bear market already at this point, so that call was right. But I think there's more downside. Now, near term, if you're trading these more actively like I am, here's my thoughts. Here's where we're at. This is a 15-minute chart of XBI. And what I'm watching now is this level right here, 64, 63-ish, somewhere around there. That's that previous reaction high. I started to formulate this video before we even got there, but as you can see, looking closely, we kissed that almost to the penny so far. When I started prepping for this, we were moving up there. So I'm trying to get this out in time, and there's just too much to cover to do in a static post. So, so far, so good on the reversal, but this is a pretty formidable resistance level that we need to take out, that reaction high. If you look at the volume at price histogram, these green and red bars over here, that shows you there's been a bulk of trades. So this is a what may be potentially a basing pattern. Now, I wanted to reiterate that I'm looking only at a short-term trade right now on LABU. I'm not married to it. It could last possibly a few weeks. Normally I short the opposite version. I might short LABD, but in this case I'm probably only going to be in this for a little while. So here's our resistance levels. That 64, 63 are pretty much, we have to take out this reaction high from the other day. And then I just drew this downtrend line here that may come into resistance. We've only had 2 reactions so far, so that may come into play, I should say, as resistance. Let's look at the 30-minute charts. You can see the same downtrend line, same lines here pretty much. And although I have the volume at price histograms tuned down a bit here, you can still, if you look closely, see there is that thin zone. So my expectation is if and when we solidly break above that level, and again, keep in mind this downtrend line may come into resistance here, may come into play as resistance. Maybe a little reaction, a back test, that would be an ideal scenario. Come up, hit that downtrend line, pull back test that level, and then move up here. So this would be most likely, and that's at around 68.12 or so, most likely where I'd be booking profits. I could possibly see a move up to this level. And if you look down here, let me get rid of this one here. I have a few different EMA pair indicators that I like trading on different time frames. On the 60-minute chart, I have the 1434 EMA pair, and what this histogram represents is simply you don't see the EMAs, the exponential moving averages up here. I like clean charts. I don't like them cluttered, so I put the moving average pair histogram down here. And so what this tells us is when the 14 period moving average crosses over the 34, you get this bullish crossover. And as you can see, what these do is define trends. There's been a lot of, in the last few months, remember we're looking at only a 30-minute chart here, so there's only a couple months of trading history. We've had a lot of choppiness and whipsaw signals, but it does tend to do a good job of catching these trends. If you look right here where my crosshairs are, follow the vertical line up, and let's draw that out just real quick. You can see that this signal here caught the bulk of this uptrend. And keep in mind, the biotech sector moves quite a bit, so that's a decent move up from the low 70s up to about $80. Then it gave me a sell signal here, and that has confirmed a near-term downtrend. Again, 30-minute chart, and what I've noticed, if you can see here, we're just now. We'll have to zoom in. Let me clear those lines. We just now flipped into the first buy signal in a while. So this downtrend, I'm on the lookout for a reversal and favoring a break above this level here, and then a continued move up in the biotech stocks. As I said, maybe a reaction at that trend line here, but if so, we continue up to that 68-ish level, and that's where I'll be on the lookout to maybe book some profits, and I'll keep posted there. So that's the short-term deal. Again, long-term traders that where you work a full-time job, you trade on the side, or you're new to trading, you're not really you don't care to do these short-term reversals and active trades. Like I said, this is what I view as a bear market trade, and I'm trading a counter-trend rally as I am in the broad markets as well. So I'm positioned long now with XBI and some other things. But then looking more than likely, if the charts convince me, I'll change my opinion. But more than likely, I'll be looking for a time to position back for the next leg down. But for right now, the near-term bias is bullish. And again, there's some work to be done, namely to take out that level, go back to that 15-minute chart. This is the same indicator pair here. When you go down to a 15-minute time frame, you'll just double the numbers. So that's a 2868 EMA pair. And again, you can see just a nice job of defining the uptrends and downtrends. And we should have, you can barely make it out there, but there's a green bar. So that pair just did cross. And again, I'll put a little more weighting, I should say, on the horizontal resistance level than I do the EMA pair cross. That's just these are additional confirmation things down here. Let's go out real quick, look at the daily time frame, see what's going on. Here's XBI. There's a uptrend line since May. This was the mini crash. I ignore that candlestick. The XBI, as well as most of the biotechs, traded down well above where most of the components did. As I mentioned, on August 24th, there were a lot of mini crashes in these securities. So this was the trend line, but then it finally gave way here, and boom, big move down. So that was the trend line break, impulsive selling, and this was as you can see here, numerous touches. So this looks like a large ascending, broadening wedge pattern there. This is also horizontal support here at 5770-ish right here. We have this reaction high from back in early 2014. Prices paused around there and finally punched through and continued higher. And there's one other alternative view I have on the XBI, a potential head and shoulders pattern. Not crazy about this one, but it does fit the definition. We have two left shoulders. For those of you not very familiar with these patterns, that's perfectly normal. In a head and shoulders pattern, you can have one shoulder. I mislabeled this. Disregard this head here. That should be, I'll change it real quick. That should be right shoulder. Little typo there. I am the king of typos, so let's fix that. Okay, there we have a right shoulder. And get rid of that. So two left shoulders and one right shoulder. Again, not completely uncommon. And you can also have up and down sloping necklines. So this, again, I excluded this stick because that was the mini crash. And as I talked in some recent videos, for those that you watched, viewing those almost as an aberration, or at least not technically significant. So this would have been the neckline. And as with most head and shoulders patterns, you had an impulsive move down once that neckline prices broke below the neckline. Volume patterns tend to confirm on a head and shoulders. You want to see increasing volume on the move down off the head as well as the right shoulder, and that's exactly what you have down here. If you can make out these volume bars, they're in light gray. I have them muted, but you can see the increased volume on the move down from the head as well as the right shoulder. So volume patterns confirm. What this is just a measurement. You simply take the distance from the head to the neckline, and you add that to where prices broke down. So technically that pattern would measure down to the $52 area. However, when looking at head and shoulders patterns, I will take this into consideration, but I give horizontal support a higher weighting, especially when that support comes at or near where the projection goes to. And so this is my support zone, runs from about 57, a little above 57 down to about 54.85 or so. Again, so my thoughts here, let's draw it out for you, would be a continue move higher, possibly as high as back testing this pattern. Might not get there, and then boom, to fulfill my downside targets, and that's where more than likely I'll close out, at least on the site. And if I re-enter the Biotech short again, that's where I'll be looking to book profits, either at the top, bottom, somewhere in the middle, depending on how the charts look at the time. So that's my near-term plan. Now anything can happen in the markets, as we know, so I'll be on the lookout for reversal. If I'm watching the markets closely, I'm watching the biotechs, and if we don't clear that resistance I just talked about, or we clear it and then start to turn back down and lose it, something convinces me, I'll close out the long position. But right now it's profitable, and I'm still looking for a little more upside. So that is the two takes, I should say, on XBI from the daily. And then weekly, this one looks pretty good here. This is an uptrend line on the weekly chart, a 10-year weekly chart, and here's an uptrend line off the 2011 lows with multiple touches, 1, 2, almost 3 there, couple tags here, and then we hammered off that trend line there. So all in all, somewhat bullish behavior. You want to buy on trend line, on touches of trend lines. You want to sell or short on a break or a solid break. Again, it's a weekly chart, so we want to see a weekly close. If and when that happens, that will likely indicate that there's considerable more downside, and it would not surprise me in the least before this bear market is said and done. Again, if we are in a more prolonged bear market to come here for the next few months, this would probably be where I could see those biotechs going to, or at least XBI down to that 38.50-ish area. There's some support above that as well, some other targets here, but I'll get to that later. And just to go back to the sector, because I know I pointed out a lot of charts that I follow, this was IBB. This was even a better defined trend line, very similar. That one broke down, and this was a target when I did the biotech video a couple months back, I think in late July. I believe I had a horizontal line here. If not, I added that target thereafter. So we've come down, on the mini crash, the August 24th drop, as well as just recently, and reversed just above this support level. I put that as a pretty decent support level. We had a reaction high here, several reaction highs, and then finally a breakout and impulsive move higher. So again, I'm just favoring that one last thrust. I think we get a little rally here in the next week or so, and then a reversal down, maybe one more low there. Whether or not those break ultimately, that's yet to be seen. But as I mentioned here numerous times, these long-term divergences on the weekly chart indicated we'd have a breakdown of these primary uptrend lines, which we did in IBB, as well as the other big one, PBE. These are your big biotech ETFs. And in the video that I did back in July, I was calling for at least a 24% drop. That's why the question mark was done when we were still inside the wedge, and we got much more than that. This candlestick is reflective of that mini crash. I remember having some puts on PBE on the morning of the 24th, and they were up like many thousands of a percent, but I couldn't get a fill on it. There was no liquidity. When I posted closing out my all my biotech positions that morning, my Biotech shorts, they wouldn't fill that one till later. But it's crazy because that did trade. PBE was down that much in one day. But either way, this is where we're at now, and I see a little more downside again. These are the support levels that now that we broke this first support line up here around 46.85, my next support zone, there's a big fat gap back here defining that, and that comes in around 41.95, call it $42. So if we do get another thrust down to make a marginal new low, that's probably where we're going on PBE as well as the other ones I just talked about.